The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 16th. No, 15th. Let's not get too far ahead of ourselves. But today is the January 15th. Terrific, let's say Tuesday. I think I'm all messed up out here. I think, what is today? It is Tuesday. Sorry about that, folks. See, it's so early in the morning. I'm actually taping the show live, so I'm off my game. We got to get back on my game. In any event, it is Tuesday, and welcome to the terrific Tuesday edition of today's Trader's Edge show. Obviously, if you're listening at 1 o'clock, this show is being taped from 8 to 9. Nonetheless, I want you to know that I'm absolutely grateful for your presence here, and my outcome today, well, just simply to be able to help you navigate these markets. So let's go ahead and get into it. Again, if you're listening in at 1 o'clock, even though I'm taping this at 8, I'm going to make this as pertinent during that hour as it is during this hour. Right now, at 8:07 a.m., we've got Dow futures trading up 7 points. The S&P futures are up 4. NASDAQ futures up 32 points. That's the leader in the clubhouse percentage-wise, up 0.5%. Russell 2000 up 0.25%. They're up nearly 4 points out there. Asia last night finished in the green. You had the Hang Seng up 2%, 531 points. The Shanghai was up 1.75%, or 36 points, closing out at 2691. And the Nikkei up 1 full percentage point. That's 195 points to the upside. Right now over in Europe, in taking a look at the DAX and the FTSE, they're both down. The FTSE basically flat, off 1 point. The DAX, no big deal, 0.25%, down 24 points out there. Goldilocks trade out at 12.90. That's off a buck, and silver down 6 pennies. She's trading at 15.62. Treasury bonds have got a little tick to the upside, up 12 ticks, or 0.25% for the 30-year 10-year note. Is up 4 ticks. She's trading at 122.01. Not much movement in the currency market. That probably is not the case for the remainder of the day. Once we see what happens over in Europe with regard, or in the UK, I should say, with regard to the Brexit vote out there. I don't know what time that is. Maybe somebody in the den knows if there's a specific time when that's going to come out. But I would expect that you would see if there's going to be some type of movement in the currency market. If we're looking for something to tip its hat to us, so to speak, at this stage, I don't see it just yet. So relatively stable just there. So let's go take a look at what's going on inside the pre-market. What's the most important thing that I can share with you right now at 8:09 that's going to be pertinent at 1:09 this afternoon? And voila, here's what we've got. What we have is brand new TAS daily profiles. We have that for 3 of the 4 equity futures contracts. And these are the levels that you're going to be wanting to watch, certainly at 1 o'clock in the afternoon or 2 o'clock or the end of the day. And it's a rarely narrow profile. We'll take a look at the ES Mini first. And what I want to do is just turn off price just for the moment, because it's going to be easier for you to see that profile. The numbers are going to be pertinent. And what you're looking for are the blue lines out here. And you'll see if you start on the very right-hand side, so if you're going to read this chart, go right to left, and you're looking at the 3 blue horizontal. Right now, it's not really a line as much as a dash because it's brand new profile today. But the top of that box is 25.99.50. So what you're watching for is if there's a close today above 25.99.50, that would be bullish. It would be bullish because another level of resistance will have established itself and price will be over that. And we'll take a look at what that means to the bullish side. But it would mean that the A to B equals CD pattern that is underway should complete itself. Likewise, if price were to close below the bottom of the profile, that's 255, I'm sorry, that's 25.51. We'll call that even, Steven, or 25.51 point out there. If you get a close below that, then that says we could have a change in trend that is underway and that the counter trend rally is over. So those are the 2 options. If price stays inside the box, and what you have is a no call, no show. Maybe it means more than that, but at this stage you would say support hasn't broken, and nor has resistance. So watch those levels during the day. Most certainly watch them at the close. Now we can go ahead and turn price back on. You'll see where price is trading. We can see that price tested the top of that profile, and it found resistance. Now, the structure of this box, by the way, is bullish in structure. And what I mean by that is even with this narrow band out here, the center line at 25.67 is closer to the bottom than it is to the top. So there's more meaning here if price were to close below 25.51. That's for the ES Mini. But wait, there's more. Because we don't have to just stop right here. What we have now is we have a new profile for the NQ as well. Now, in the case of the NQ, it is the only of the 4 equity futures contracts that has not taken out its previous daily top of its box, and that was right around the 66.95. Well, to be exact, it was 66.89. Out there. That was the top of its profile. And it was not able to close above the top of its weekly profile. That has not changed. That's 66.29. The structure of this box is pretty equal in weight. In other words, it's neither bullish or bearish structure. We can see that center line, which is at 65.43. Pretty much equidistant from the top at 66.45 or the bottom 66.41. Those are the levels that you would be watching. 66.45. If the NQ closes above that, remember we said this morning the NQ is the strong dog out here. Well, if we take a look at what the NQ has done so far, it has not tested the top of that profile. 66.45. We can go take a look at the shorter term time frame charts and get a feel for whether or not that is likely outcome. But you want to watch to the downside. You want to watch 64.41 and to the upside 66.45. A trade with inside there is a not meaningless, but it won't have conviction one way or the other. And wait, we do have more, but it's only in the Russell 2000. We do not have a new profile in the Dow. We have to rely upon the older profiles, and they are simply bullish because price is trading above both the daily and the weekly level out here. Now, in the case of the Russell 2000, what you'll see is this is a bearish structured box. What do I mean by that? Whoops, I didn't mean to turn it off. I meant to turn off price. Here we go. What I mean by that is take a look at the top of this box, which is at 1451. The center is at 1438. See how close that center, it's not really in the center, is it? But this, the middle line inside the box, it's not in the middle. It's much closer to the top. Proximity is power. In this case here, the center line of that box is where both buyers and sellers are most comfortable with price. But if sellers are comfortable with price there, and we know that sellers sit at the top of that profile, 1450, this is a strong level of resistance. The Russell 2000 closes above the top of its profile. Doesn't have to be today, but if it is today, or whenever it might be, that's a strong bullish message. What traders inside the Russell 2000 equity futures contract ought to be able to do, as long as price trades within this profile, is explore the bottom of that box. And that's at 1400. And folks, it'll seem like a heck of a move to the downside. That is about 35 points or so from where we're trading right now inside the Russell 2000. It don't mean a thing if it ain't got that swing. And that swing would need to be a close below support. So watch the 1400 level inside the Russell 2000. You don't need to be aware of anything else for the rest of your day. How do you like that? We're still going to make the next 45 minutes as interesting as we possibly can. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Right now, Dow futures up about 7 points out there. And we do have a question that came in. I'm trying to locate a chart that I use. You guys are familiar with it. It's a seasonal cycle pattern. And if I can find that, it should be right here. And I just have to cycle through a few things. And that way I can maybe better... here we go. Yeah, here we go. Okay. So I'm going to go ahead and post this up on the screen right now. Start from current chart out here. Now let me read you the question that came in. That way you'll be able to, I suppose, follow along with the with Stevie's thinking at least. And that's it. So this is, hi, Steve. It says your newsletter suggests a move down into mid-February before a longer-term move up. So those of you that are not subscribers to Mastering Probability, you now know what our thesis is out there. But this is a subscriber writing in. I have to answer his question. He wanted me to take a look at it for him on the show today. He says, my question is, given that you expect a lower low before we can resume a move up, yes, question mark, yes, that's correct. And I assume your target would be a end of an A to B equals CD down, where the Gartley cell starts a C leg. And so we'll take a look at that. So that is one possibility. So one possibility is that the market is going to form an A to B equals CD to the downside. So we'll take a look at that. But he also writes in and says, is there not a possibility that we only get, say, a 50 or 61.8% retracement of the recent leg up and do not have a lower low? And I'm going to answer that question and say, yes, that's also a possibility. Absolutely. So I think that kind of covers. Here he really goes on to say, I've seen analysis of these V-shaped bounces that say only 50% of them actually have made the lower low that most people expect, including yourself. So, you know, so great question out here. First question, because of the way that the question was framed, was why February out here? And the reason is this is the annual seasonal cycle pattern over the last 86 years, really, over the last 86 years. And typically what we see is we see the Dow. This is for the Dow, obviously. Well, not obviously, but it's for the Dow. And what we typically see is the Dow forms some type of top in the early part of January. And January 15th, it's on average, it's January 6th. It doesn't always take place on January 6th. I don't want to get too caught up into the dates that are here. Those are the dates that average everything together, but it doesn't have to occur on those dates. You'll also see January 30th. So the market, the Dow, typically forms some type of top. We'll call it the January timeframe, and it moves down towards the end of January, but that can be extended out as well. So right now, my time frame that I'm looking for, depending on when this starts, is between the end of January and mid-February. Could go on beyond that. We'll just have to take a look at things one step at a time. So there's that cycle, and that's going to answer the question with regard to, do I believe, that's just part of the answer to the question, do I believe that the market will go down before we resume higher? Now, the question that was, let's do this here. Let me add a chart. Let's just look at the straight A to B equals CD patterns. So it's going to punch up on our screen here is the Dow. We're going to go take a look at two possible patterns. Now, in order for me to do this, I have to actually add that tool to my system. So give me uno momento, por favor. There we go. So now I've added Stevie's A to B equals CD tool. So let's take a look at the upside A to B equals CD that may be underway, and we're looking at the Dow specifically. And if we take a look at it, this is one pattern that's under play, that's in play right here. The A point would be the low of December 26th. The B point out here, let me just make sure I get this correct. The B point is either the 28th, which was 23,381, or 23,413. So it's January 2nd. So that's your B point. You had a one-day reversal or retracement. That was the low on January 3rd. And what you'll see out here is the one-to-one level would be 24,339. So if the pattern that is underway right now inside the markets is an A to B equals CD to the upside, which, by the way, since the high out here in October, that would really be the first A to B equals CD pattern to the upside. So what we know here is that the Dow itself made its highest high in October. In fact, if you go back into the 2007 timeframe, Phil and others, you'll see kind of a similar pattern in that the market didn't really get rocking and rolling to the downside until there was a Gartley sell pattern that had formed. Well, the Gartley pattern requires an A to B equals CD. What it doesn't require is a Fibonacci retracement. That's just stuff that is been added since that is more logical for us to take a look at where the two twains shall meet potentially. And what I mean by that is if we take a look at the retracement just off of the prior swing point on December 3rd, so if we go from the December 3rd high down to the low on December the 26th, you're going to see that the 0.618 retracement level basically lines right up. I mean, identical. Well, not really identical, but really close to identical with the 0.618 retracement. That's coming in at 24,349. If I erase that and go back to the A to B equals CD, that's coming in at 24,339. So that could set up a perfect Gartley sell pattern. Now, Gartley sell pattern, if that were to occur, has 5 potential outcomes. And one of those outcomes would be the A to B equals CD to the downside. Now, on this system, the C signal system, what I have to do, it won't let me grab an imaginary point in time like the C point being up here at 24,339. So instead, what I have to do is in essence tag the current high that we have, which would be 24,014 on January 10th. But you'll get the message, so to speak. Now you're seeing an A to B equals CD to the upside. That could set up the Gartley sell. And if it does, the ultimate outcome of that Gartley sell could take us down to that A to B equals CD area in the 19,747 range out there. Now, on A to B equals CD, there's no way we can say that one is formed until the B point is crossed. What we know right now is the B point was crossed inside of the Dow. So that's why there is the potential of an A to B equals CD to the upside. Could it just be a retracement? It absolutely can. But what else is it that we need to take a look at, Phil, out here? What else could be important to assist you and I with where the market is headed to? Well, one of the things that I think we need to watch, and this is basically, Phil, this is just between you and I. Everybody else out there, Close your ears, close your eyes. Don't look at this because you would be cheating otherwise. Of course, I'm being a little facetious out here, sort of. But if we take a look at what might be going on. So, Phil, how we're going to answer the question, are we going to go back and test the lows or beyond, that A to B equals CD to the downside, if that's how things play out? What you and I are going to do is we're going to focus in on the logarithmic scale chart for the Dow. And what we're going to take a look at is we're going to take a look at the low from March of 2009. And then we're going to take a look at the low out here from January of 2016. January, February, doesn't matter. They're both virtually the same. And then we're going to watch to see if price trades below that level. That's where price found support inside the Dow. This is a monthly chart that we're looking at. And if price gets below that, well, then we probably have that A to B equals CD to the downside. We're not there yet. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the Dow. It's at 8:30 in the morning, by the way, if you're listening at 1:30. This show is pertinent at just as much at 1:30 as it is at 8:30. And what we're taking a look at is just trying to analyze and try to anticipate the market's next moves out here. And because we're in this unfavorable seasonal cycle, meaning where we should see a top and price push lower, we're kind of debating the question, well, if that unfolds, where does price take place? See, if the bottom that came in here on December 26, let's say that we're October 26 or September 26, our conversation that we would be having is that, in my opinion, we would say that a major bottom had formed out there. Now, the reason a major bottom, now this is going to be the Dow Diamonds. So I've just switched over to the Dow Diamonds. That way, those of you that are following along at home, you're using the ETF structure, what you're going to see is the 1 to 1.618 A to B equals CD to the downside that formed. I mean, it was almost right to the tick out there. It wasn't right to the tick, but really close to that. Now, when I pull the chart back further, what you're going to see is that was a Gartley buy pattern. It was a Gartley buy pattern because what happened as price got down to that 1.618 expansion level, it was a huge bullish reversal signal. I mean, a huge one. A huge one in a big way. Key reversal session, which means the prior bar was exceeded during the current day's low, exceeded the prior bar's low, the current day's, so I'm really referring to the 26th, had exceeded both the low and high from the 24th, and price finished by one tick. What do you mean by one tick? It was the highest point volume, highest point movement day in the Dow Diamonds, or the Dow, in history out there. So big bottoming side, but instead the bottom came in towards the end of December. And now we're shifting into this unfavorable seasonal cycle time frame. Now the Dow Diamonds, if we were just simply going to use it, what we would say is that is going to go ahead and complete an A to B equals CD to the upside. The reason we would say that is because that B point inside the Dow Diamonds was passed with volume. That B point had volume of 5 million shares. It was passed with 7.3 million shares. That says the Dow Diamonds is headed up towards 243.39 to 248.02. So our timing could be off with regard to the January 6th top. Well, it's already the 15th, so we know that in essence it's off. Again, we're going to use this as a benchmark, as a guideline as to what seems to be unfolding. Now, you and I would take a look at this A to B equals CD inside the Dow Diamonds, and we would say more likely than not, this is going to be more than a 1-to-1 A to B equals CD to the upside. But that's neither here nor there. What is here, what we do want to watch today is we want to watch current price. And what that does then is that, so, and with regard to debating the question, Phil, if a top does form here, which I believe one will, just a matter of finding the pattern that completes out here, then price at least gets back into December 26. And if we see price coming down with volume of 9.7 million shares, then what we say is price goes and tests the bottom, maybe even blows out the bottom, maybe there's an A to B equals CD to the downside. But we'll want to take a look at other things as well to assist us with understanding what the market is communicating to you and I. So I don't mean to beat this dead horse, and I won't beat it anymore. I think what is important for today's information, whether it's 8:34 in the morning, which is not, we're not going to see it, but really 1:34 in the afternoon, is where is price trading in relationship to the TAS market profiles for the daily equity futures contract. Is the ES mini trading above 25.99? If so, that's bullish and says it's going to complete its A to B equals CD to the upside. Is the NQ trading above 66.45? If it is, that's bullish. Does the Dow continue to trade above 23.674? Yeah, 23.674. If so, that is bullish. Does the Russell 2000, is it trading above 14.51? If so, that's bullish. Likewise, on the bearish side, that says, hey, your A to B equals CD to the upside, Steve-O. Bah, humbug, ain't going to happen. Well, I would second that motion if prices trade below and closes below 25.51 in the ES, 64.41 in the NQ. And the Dow, that's more questionable, so we'll skip over that and go straight to the Russell 2000, and that would be 1,400. So, Phil, that's Stevie's call as of 8:35 in the morning. I hope that helps you out, and thanks for writing in. Hey, you too can write in. You've got about 20 minutes or so if you're listening and you'd like me to answer a question. Now, don't forget that I'll also be doing tomorrow's show which will be wonderful. Today's Tuesday, right? I think today's Tuesday. And I'll also be doing tomorrow's show, Wednesday. Yeah, wonderful Wednesday from 8 to 9. So if there's some questions you'd like me to answer, just simply go ahead and send me an email, and I'll somehow get them in the morning. You can listen to those between 1 and 2, and also on Friday. So this week it's the early morning Stevie special out there. So what else do we want to look at out here? Let's go see what else is moving in the markets. Let's take a look at gold. Gold is trading off $1.50. Is that a big deal? Is that a problem out here? And the answer is, well, let's go find out. If we go take a look at Goldilocks out here, not really a big deal. If we take a look at gold priced in dollars, that's where we're going to go ahead and begin our morning. What we're going to see is that what gold did so far intraday is tested the top of its profile, and that's at 1288.30. The top of its box, old resistance, has really become new support out here. The problem is price has not been able to take out resistance, and resistance is this, really, we would have to call it the high now from the trading day of January 4th, and that's up at 1300.40. Price needs to take that out to get back to what we'll call uber bullish out there. I didn't say call an Uber. I just kind of said uber bullish out here. Right now, we just have a sideways consolidation in a bullish trending market out here. It's the only call you can make. Well, I take that back, because we could make other calls out there. We have to make other calls. You want me on that wall. And to be on that wall out here, what we have to take a look at is the Gartley sell pattern that exists inside the February contract for gold out here. You can see the beautiful A to B equals C to the upside. You can see approximately a 0.618 retracement from its swing point high. Actually, that swing point high should be up there. Looks like I maybe didn't hit it exactly, but that's okay. Close enough for this game out here. And so not all Gartley patterns work. How do we know if a pattern's going to work? The way we know a pattern is going to work is either support will fail. That would be a downside pattern, this Gartley sell. Or to the upside, resistance will fail. In this case here, we're trading with inside the Gartley sell high out there that we talked about at 1300 and the top of the market profile in that 1280-ish area out here. This pattern will not come into effect, will not confirm unless we see it close below the bottom of the box. That's 1272.10 out there. If we take a look at what gold is doing inside the other major currencies out here, not much. It's not as if we're seeing a huge run to the exit, the Brexit, meaning, hey, I don't want these pounds. I want U.S. dollars. And you get U.S. dollars by buying U.S. treasuries. You most certainly can, because that's what they're going to pay you in when you go to cash them in. Steve Rhodes with TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Look, the show's being recorded. It's now 8:42 in the morning. So if you're listening, we're going to make this as pertinent for you as we can. With the last two segments here, I don't have any questions that I see that have been sent in. So why don't we take a look at some things that are moving in the pre-market? You'll be able to take a look at how those are doing, at around 142. Moving to the downside, let's take a look at those. So you've got the tale of two pot stories out here. You've got Canopy Growth. That's the leader dollar-wise to the upside. Not a big move. It closed at 42.49. It's trading at 43 bucks. Tilray, on the other hand, closed at 100. Currently traded at 95 bucks. So what does $95 do for Tilray out here? Well, if we go take a look at the chart, and this chart here, this equity did not begin trading until July 2018. So we have limited data, but the data that we do have that we can use would be its TAS market profiles. And what we can see here is at the top of its profile is $80.92. What do we say that this was trading at? About 95 bucks, 95.50 to be exact with regard to the last trade. So pulling back and testing 80.92 would be no big deal. In other words, this is bullish from a TAS market profile perspective. There's not enough data here to generate a weekly profile, and so all we've got are the dailies to go on. This had a pretty decent move volume-wise, and not bad from a price spread standpoint just 2 days ago on January the 11th out there. But I believe that the lockup expires today, if I'm correct on that. I think I heard something like that at about 3:30 this morning. And so, it's got a little bit of selling, but that selling so far is not taking out a level of support out here. So that's Tilray. If we go take a look what's going on inside of Canopy Growth, CGC, again, that's trading about 43 bucks, closed at $42 yesterday. As we take a look at it, here prices above both the daily and weekly profiles. Now, the weekly profile was bearish in structure. You saw price close above that with conviction. That was on January the 10th out here. So what this suggests to us is that Tilray is, if it can surpass the November 7th high, that's 46.74. Right now in the pre-market, it's trading at 42 bucks. So that's where it's probably headed to. The bottom of that, 46.74 is the number out there. If price can exceed that, then what it will do is and it probably is headed back towards this level anyways, which is a high on October 16th that was formed with 37 million shares. So it's a high volume high, has not been tested. Could be the low of that high. So it could be the low of that trading day, and that is 51.26. So there's your tale of two of the pot stocks inside of the market out there. Now, if we take a look at what's going on inside the banking sector, let's do that. You've got J.P. Morgan out with numbers before the bell. They closed last night at 100.94. They're down a couple of bucks. They're trading at 98.33. What does 98.33 do for J.P. Morgan? Well, not a lot. What it does is it takes back most of yesterday's gains. No big deal. When would it become a big deal? Well, it becomes a big deal if it closes below 96.53, the bottom of that daily profile that formed about 4 or 5 days ago. Now, at 96.53, that also is going to get close to testing the December 26th level. So we'll want to watch J.P. Morgan throughout the day. If it does trade lower, continues to trade lower, and starts to trade into December 26th, does it pick up volume on the way down there? And by volume, we're talking about something north of 22.5 million shares, the high of which is 95.96. That would be the number to be watching. But right now in the pre-market, really no big deal with regard to J.P. Morgan. If it starts to cut through some of its support levels, well, then that's a different story out here. What else is it that we can look at? No reason to go take a look at, let's go look at Bank of America. Now, I don't know if they were out with numbers. No, I don't see any numbers out here. They closed at 26.37. At 26.15. Let's not spend any time out here. There's nothing really going on inside this chart to worry about. To the upside, Netflix seems to have taken over the #1 slot now. This closed at 332. We'll call it 333. Straight at 337. No big deal there. Now, the big deal, I suppose, could be, can price close over 341? Pre-market is 337. Why 341, Steve-O? The answer, my friend, is because that is the top of its weekly profile. That is resistance. Price traded up in resistance yesterday. It got up to a price high of 341.09. Closed back underneath it. Closed out at the I'm sorry, that was 2 days ago. That would have been Friday. And then yesterday was an inside day out here. So what price is trying to do, it's trying to take out resistance. 341 is the number. If price can take that out to the upside, where will it run to? Well, the next set of swing points is back here right around the early part of October level, and it's in the 385 area. And that would be Stevie's answer as to where Netflix could run to if it closes over 341 even. Steven, what else can we take a look at? Not much. Not much. Actually, we can take a look at anything we want. U.S. dollar index out here. So what's the U.S. dollar index doing? Let's go see what its profile values are showing us. This shows 94.82 is the bottom of that profile. If price closes below 94.82, then what we have, and that's not the swing point low. The swing point low looks like it came in on January 9th, 94.63. Yeah, and January 10th. Both of those have a 94.63 number. So that the number we're giving you is the bottom of that daily profile out there. If price, right now what price is doing, it's testing the weekly. It's testing the weekly bottom of its box. So that is a little bit of resistance out here. What other pattern is in play for the U.S. dollar index? Let me see if I can pull this up on my other chart here relatively quick. Let's see if we can. Now, I probably don't have the March contract, which will be fine. We can work around that. Do I have it? I don't. I've just got the continuous contract. Just curious. Let me put this up on the chart out here. What price is also doing is testing Stevie's red line. So here's the U.S. dollar index. And when it's testing Stevie's red line, it's suggesting that price wants to head lower. Now, here's a cool thing. You know, last Tuesday, so a week from today, a week ago today, what we did was we did the workshop on that Tom DeMark setup 9-count. One of the tools that helps us with invisible, it's no longer invisible if you use the tools in the system out here, is support and resistance. On this chart, it happens to be this little red dashed line out there. And if you take a look at this little red dashed line, look at how price came back and found support out here. So now we know where the real support level is. And inside of the U.S. dollar index is about 94.75. That's using this method. It's at 94.82 using the bottom of its box. So closes below both those. We're going to go with Stevie's red dash line out here. And really, because there was a piercing candle, and that was a Tom DeMark setup 9 count, we really have to use the low of January 10th out there. Price closes below that. The U.S. dollar index simply wants lower price. We're trading between support and PS day resistance. This is Steve Rhodes. This is 8:50 in the morning, 1:50 if you're listening during the normal recording or the normal live play of the show. We'll be right back to wrap things up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last question that we'll deal with came in. This is from Michael H. Michael writes in, "Hey, Steve, new listener, love the show. Can you please explain Stevie's red line? Also, I think I'd like to go long on Key. K-E-Y is the ticker symbol. What is a good entry point?" So since you asked about Stevie's red line and Key, let's go ahead and apply both of those to this chart out here. So let's put up the daily chart here for Key and see what it is we see. First of all, the red line is really the actual name of it is the oscillator unchanged line. It is not as sexy, or at least Stevie thinks it's not as sexy as Stevie's red line. Now, what it's doing, what its real value is what you don't see is the bottom panel on his chart. I've eliminated the bottom panel by using a line that changes color from red to green so I can have less information on my chart to make a decision real quickly. But what Stevie's red line, what an oscillator and change line is doing, is telling us whether we have a rising price oscillator or a declining price oscillator. That's the bottom panel on my screen out here. And what you will see is your price oscillator for key is right now registered at 0.627. That might have been as of yesterday or the day before's close out here. Let's not worry too much about that, because I only have about 30 seconds left. And there's nothing more bearish than a falling price oscillator below zero. What key has is a rising price oscillator below zero. And as long as price stays above 1506 for you, and by the way, 1506 could be your entry price. But I think that key is going to run to the upside. It is not going to go ahead and pull back to 1506. And it's going to head out to this Tom DeMark setup trend line. That's where it may find resistance at 1853. This is a recycled Tom DeMark set up a 9 count out here, and it did that yesterday. It confirmed that pattern yesterday. So whether or not you want to play key as a momentum move, support would be Stevie's red line, 1506. Sign up for my newsletter service. There is a workshop on there that will explain all the details behind Stevie's red line. It is a tool that you want to learn how to use. It's a cool tool. Folks, stay tuned. Larry Pesavento is up next. If you're listening live at 1 o'clock, it's David White who's coming up next. He's going to have an extraordinary workshop come tomorrow night. Sign up for it on the homepage of TFNN. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.